All right, hello everyone. Welcome back to mentfx. This is webinar 3 of the Private Mentorship, and today we are going to look into some new things, answer some new questions, take a look at some viewer-submitted trades, which I thought were beautiful, so we'll take a look at that, take a look at some top-downs, as we always do, and work through questions that any of you have, and we'll see how it goes from there. So, let's get started. We're not going to start with EU straight up. We will work our ways into EU. Yes, everything's recorded. It's already being recorded, so you'll have access to it after if you ever need it. And for all the new people that join, you know exactly where to send them when they need to come and see some of the webinars. So first and foremost, I have a little gem that I'm dropping for you guys, not concept-wise, but maybe a little bit concept-wise and learning-wise, education-wise. On Friday, I was a little bit bored and just at home. And had nothing to do. So I opened up Bitcoin and I just started recording because I just wanted to see what I could do. And again, you guys know Friday absolutely sucks for trading, especially end of market, end of close, but it's all good. I was looking at Bitcoin on the Friday night, so very, very little movement. But despite that, and I recorded all this so you guys will have access to it and see exactly how I went about getting into all these trades. I worked within this very, very miniature range that you see right, where is it? Right here. This one wasn't recorded, so ignore that, even though that one's beautiful. Basically recorded all the stuff in here, and how I look to get involved and properly managed and risked on all these trades right here. And you'll see how I worked through in this tiny little range. So again, I was forcing more trades than I usually do, but you'll see that everything is still under the exact same things we teach, which is waiting for supply and demand zones to be hit, waiting for structure to shift on lower time frames and higher time frames, waiting for lower time frame Wyckoff schematics to be met, and following that with proper management, partials along the way, and everything of that sort. So you guys are going to actually, it's about a 2-hour long video, so you know it's relatively long, but it will literally show you guys how I take in this case Bitcoin, or honestly it can be any given market, top down, and look through every single potential play that we can make, and how I then get involved in those plays and watch Wyckoff occur live, right? So you guys will, a lot of you that want to know about Wyckoff or have problem determining if it's type 1 or type 2 or how to do that, you guys will see how exactly I funnel myself into potential trades and spot these things intraday to get you involved. Now again, it gets a little bit crazy, and what I mean by that is, even if we look at this one right here, I didn't get the entry on this, but there was a 1 second schematic that formed. Where was it? Somewhere in here. Yeah, there was like a 1 second schematic right here, which again I spoke about during at the time of. So it'll look insane, but as you guys can see, these beautiful little tick, whatever you want to call them, I don't even know, are their own Wyckoff schematic. And if you really do want to follow them, you'll see it for any of those that are experienced. You'll see the selling climax, the AR, the ST and B, the sign of strength, the test of the last demand zone, and the takeoff. Okay, it's all right here. It's very, very ugly, but the point of what I did, and the reason I want to talk about all this, is to show you guys that this occurs absolutely anywhere. And again, yeah, I'm high, bro, but you'll see this, you'll begin to understand exactly what's going on here, especially those that are licensed professionals. Everyone that's been here for a while looks at this and can actually see the Wyckoff here, and I promise that they can actually see this. Ask Andy. He'll tell you he can see it. But it's all there. And that was just part of another fractal Wyckoff that occurred here. And again, I think that's like a 15 second. Yeah, so maybe even a 5 second. No, it's not a 5 second. 30 second. Oh no, maybe it is a 15 second. Either way, all this was live. So you guys will watch me analyze, talk through it as it forms, how I'm getting involved. Again, I didn't get involved in this 1 second on this 1 second one, but we used it to mitigate risk and all that stuff. So it's beautiful. It's much more clear if you use lines instead of candlesticks. Oh yeah, let's take a look at that real quick. Maybe it can help some of you that are working on your Wyckoff skills. Let's take a look at this. I guess. Nah, I like the little lines. I see it all with the lines. But yeah, definitely a very ugly pair. And definitely very ugly when we get down to the lower time frames. But everything works the exact same way. And you guys will learn to see that over enough time. So as we're doing all this, definitely begin to drop some questions that you guys want to work through. I'd love to work through some of those and help answer some of that. Yeah, this was beautiful, fantastic. Okay, so the first thing I wanted to do was I wanted to look at a viewer submitted trade. It was on EU, so a lot of you are asking about EU, and I think it was a great, it was actually a beautiful trade. So we're just going to look over it real quick. And I'm going to actually have this uploaded to the other course materials as well. But ultimately, let's just work through this step by step, and then we could look at it on a real chart. But this is just going to help a lot of you that are still working through how to actually use these 3 sections, third section of which is not complete yet, but how to use all these things and put them together in the form of finding your POIs, finding your supply and demand zones, waiting for their mitigations, whether you're refining them or not, and then waiting for confirmations and how to get involved in those confirmations. So step 1 is, this guy was looking at Euro USD. So this was Lotus Voids, Kevin, as it looks like. So thank you a lot, Kevin, for providing this. This is absolutely fantastic learning material, and I love looking at this and reading through it. Shows a real understanding of the concepts, and a lot of you should aim to do this exact same thing. Yeah, thank you, Kevin. Thank you. So as you can see, the daily, he had this zone marked out. Now, again, what's interesting about this specific zone is, again, if you were to look at it on a lower time frame, you might notice that there are areas in here that are still left and unmitigated. And you could have refined to those areas that are unmitigated because, as you all know, I like to trade supply and demand zones that have not had any mitigation. But that said, you are not wrong to use general areas. And similarly, if you were looking at this and saw, for instance, any of the section 1 stuff on mentfx blocks, for all of you that know, you have this down move, this up move, this down move, this up move. So again, of course, we understand that we did leave some kind of mentfx block back here, and that on its own is its own form of a POI. So if anything, he could have taken the mentfx block, refined it to a demand zone that he liked, and taken the 50% of it and looked at it as an overall area. As you can see on the daily, he noticed price tapped into the 50% of a previous tested demand zone. So he already understood that it's been mitigated, but he, at this point, was when he looked at it, right? So all he was doing was building a cause for potential higher price in this specific case. He said, I had this daily zone back in time that was mitigated. However, I'm seeing that it's mitigating right now, so I'm going to expect that there might be some mitigation that wants to take us even higher. So that's a fantastic expectation. It's a fine bias to have. And now let's see how he executed that bias specifically, okay? So as he drops down to the lower time frames, we can easily see that, again, we have the last down move from this high to this high. Again, remember, you always want to look at every market almost the same way. So where's your mentfx block, right? If you're looking at structure from that point of view, it's from this high to this low. And the validation of that comes from where? The trade above this. And the second we trade above that, we are valid, ultimately, to look for potential entries for bullish price action from the newly formed mentfx block, which is putting in order flow that is now potentially going to be bullish. So remember, you constantly, this is something that's actually really important, so write this down if you have to, you constantly exist in a limbo between bullish and bearish price action. And what's interesting is price will only move from supply and demand zones to other supply and demand zones, or as we like to say, from inefficiency to inefficiency. Always. Yes, so again, I just covered that a little bit. It was mitigated earlier, right? So it was mitigated, but he was looking at price after it began to make this run. So he said, okay, why is it making this run? It's coming most likely from here. Now again, you could go inside this price action and most likely find the area that was still unmitigated and what this actually ended up mitigating, but this is just as powerful and fine, because what he's doing is he's putting together most likely the idea of mentfx blocks that were left behind, structure breaks to the higher time frames, the move back that's coming into these zones, and now it's potentially going to continue higher. His bias is put in place. You can't hear me. I think everybody else can. I don't know what's going on. Also, the mentfx block wasn't mitigated, the one before the OB. Oi, you mean before the zone? Chill. Okay. So either way, let's just keep working through this really quickly, and then if you have any questions on this specifically, we'll go over it in a second. So on the 4 hour, as you can see, just making that, just kind of working with that bias, we do have this last down move, this up move, right? That's not validating the zone yet until it trades above here. Now, as it does that, we validated potential future bullish order flow on the 4 hour. So we always exist on multiple time frames, and on this specific time frame, we've just validated this mentfx block right here. Okay. Give me a second, guys. Can everyone, there you go. It's all good. No worries. So on this specific, damn, I have to be typing fast. Thank you. So on this specific time frame, we do have this shift in mentfx block structure. Additionally, we have intermediary structure, candlestick wise, which is starting to put in higher highs. Now, as it does this and it breaks higher, we leave behind imbalances. As you can see, most stuff gets filled on a specific time frame, but we leave behind this last down move, which we can refine to this zone, which, as you remember, can be refined to the last wick. So in this case, he had this last demand zone shown by the wick, which we'll again see on a lower time frame in a second, which is going to look most likely like an unmitigated demand zone. And as you can see, he found this demand zone 2.0 that was created after the tap into an older demand zone. So let's go down to the lower time frame to make sure it looks better. Okay, so exactly, he's put in potential bullish bias. The bullish bias is coming from an earlier, already mitigated demand zone, but it has moved from it, so it's fine to use it now. And now he's expecting price to come into the zone, as we can tell, and continue making new highs above the liquidity created by structure. So as he makes his way down to the 30-minute in this case, you can see that he begins to refine that last down move. Instead of using this last down move right here that has been mitigated, as you can see with this move here, he used the actual mitigation before the continuation. So this on its own is what you can call demand zone 2.0 if you'd like to, but it's a wick, and he used the 50% of that. 30-minute, notice the new demand zone that was created on after the tap into the previous demand zone, exactly. So like I said, price may be looking to tap into that. So again, he doesn't know if the tap into it is going to happen, first of all, and he also does not know if when we tap into it, we are going to meet higher prices. This is something that's very crucial to a lot of your own understandings. When you have an area or a zone, you need to preemptively decide what you're going to do when price gets to that zone. And you already have to know exactly what you're expecting if you are to have the mitigation that you want. Now, if that zone, and this is something I've brought up multiple times, but something that a lot of you need to recognize, if that zone is to be traded through, or even just tapped through, just a little bit, like a tiny wick like that, if this is your zone, there's a tiny little wick, just goes boop, that zone's invalidated. You're no longer looking for buys. You're no longer looking for your confirmations, because you've had a zone and you have a bias preset in motion. And if that bias is by any means, even by 0.00001 pips mitigated, don't make that voice again. So if that's mitigated just by a tiny little bit, that shit's done. You do not want to be trading that zone anymore, because what's happening is when you decide on a demand zone like this, right, of some sort, what you're actually doing, right, from a logical perspective, is you're saying this is the last area that institutions or smart money or the composite man had to sell into buys. So he, as long as he remains above that area, he's only coming there to mitigate prior orders to continue to new highs above structure. So the second we trade below that, what we're actually doing is we're taking out that last down move. We're letting everybody that had been trapped, if they were trapped when they got sold into before the big buy, get out of the position, which means our bias no longer is remaining at that low, right? So I've seen this happen quite a few times, where someone may have a zone of some sort, price comes into it, right, begins to do some kind of Wyckoff, never really shifts, no real shift of structure, no Wyckoff confirmation, nothing like that, right? The dip below it, just a tiny little bit, just like that. And then the move above. Oops, that doesn't work here. So we have Wyckoff happening like this. You get the tiny move through and the move above. At this point, I've seen people want to trade the last demand zone here, and sometimes it might work, or even when the Wyckoff gets confirmed, when we trade above the AR, of course, or make the new mentfx block off the last down move before the up move, people are looking to enter this stuff. And as they do, you might see some little bit of profit or something like that, and then you have it trade through. And everyone, goes in and they wonder what happened. Why are they losing money? How is this not working? Well, it's because it's not part of your system, right? This right here has shifted your area of interest or your demand zone or whatever into a potential new bearish structure. Because the second we shift through this, we're no longer holding, right? So let's say even on Euro US dollar right now, and again, we'll do a top down on this together in a second, but we have this last demand zone, and that's fine. A lot of you might be looking at this demand zone and want to be traded into. It might not be. We are putting in some potential bullish structure here, so we're ready to potentially go higher off here. And it's kind of interesting that price closed there. I was actually expecting this, but price closed right off the last demand zone here. So this is really interesting. I think that we might see a run up. Not 100% sure. I literally don't know. But it was just really interesting that price closed like that. Now, if we go to the 15-minute and we look at this demand zone, we can all agree that if price is to come into here and give us something of this sort, we are happy to go for buys here or confirmation buys inside of there, or mentfx block 2.0 confirmations, right? So you have mentfx block 2.0 entry, right? This is perfectly valid. But the second we see this same price do something of this nature, where we come down, Wyckoff starts selling climax, AR, ST, STB, spring, trade above. At this point, The fact that we made a 0.01, whatever this might have been, pip movement below the zone, we've actually shifted. Not 100%, we don't know. Maybe it's just a liquidity grab before higher prices are met. But the reality is we've shifted. And when this happens, if it does happen, you shouldn't be surprised why Wyckoff in this case, or even the mentfx blocks, or even structure didn't hold. Because you've put together a guaranteed bias. And if that bias is ever traded through, guys, we're not drawing these rectangles on the chart for fun, right? We're not putting them here going, yeah, we got our little box, but we don't need to trade it. Like, what's the point of drawing the box if you're not going to actually trade the box? There's a reason you put these in. There's a reason you find structure. There's a reason you look how it breaks momentously. And there's a reason you put in the actual high, whatever it might be, or even the body, right? And when you do that, you're already presupposing a guaranteed move in the market. And the presupposed move is that price wants to come in here, accumulate, and take higher liquidity. Now, that's fine. But the second prices, and this is also an emotional side of things, if prices come into here and just do this, okay, you're not wrong about shit. There's nothing you're wrong about with the zone being an area of interest. If any of you have this area of interest right now, guess what? You are perfectly correct. This is a beautiful demand zone with a beautiful break and structure higher, with a beautiful mentfx block that was left from this high to this low. But at the same time, we're starting to put in that same time frames higher highs. So when we break this right here, we're already putting in bearish structure. Now, just because we're putting in bearish structure on this specific time frame does not mean that we are going to remain bearish all the way down here, right? It just means that we might be bearish into this higher time frame here, this higher time frame area here. And again, if we go to the 30-minute or even a 25-minute, this might look like still the last low. For instance, if we go to a 25-minute, right? There's now no question that this is still the low before the move, right? Price broke structure here or here, whatever you want to use, from now you can potentially say this overall demand zone, and again, the unmitigated one, which would be this last candle right here, and this is now perfectly valid as well as its own demand zone. And you can see that structure has not put in higher highs or anything. But now if this right now were to make this run here, we've put in new bullish structure at these new lows. So if price was to come here and you were to start to just buy it, even on a risk entry, just buy it, and this happens, it's not because what we teach here doesn't work. It's because you literally forgot about the fact that structure has shifted already, and now you're trading the opposite side of that, which is why, again, you're looking for confirmation. And again, when this happens, or this happens, you're not wrong about your analysis. The only time your analysis is actually going to be considered quote-unquote wrong is when either you enter prematurely on an already defined system, or you don't define your system and just enter, right? What's funny is your analysis can be fully correct and you can still lose, but that doesn't mean your analysis was still wrong. It just means that it was an unlucky trade. Because when you have a system that you've put in place that you know works, that you've backtested multiple times, and you know you can actually trade properly, the only way that it goes to shit is if you literally emotionally fuck yourself. That's it. Okay, that's ultimately how this entire market works. And the market, like I said, the composite man, whatever you want to call him, he's a sly motherfucker. He will find ways to make you begin the FOMO into stuff. And a lot of you have this question where, okay, I have a zone. Price comes just a little bit there and then takes off. Okay, but I want to get in. So next I'm going to enter in earlier, right? But the thing is, the second you make that decision, you're already limiting or changing up your system. Similarly, you've had times where price comes in, comes higher, and then drops. And now you want to get in again. You're FOMOing, and other times, because you've seen this happen so many times, and you're afraid of missing it, or for instance, you have price, let's draw this out, or for instance, you have price come in, give you some kind of Wyckoff, right? And then you don't get an entry and it just drops off. You're like, okay, because I see it drops off, next time, even though I don't have Wyckoff confirmation, I'm going to get in. Next time price comes in, and you see something like this happen, you're like, okay, no, not even that. Let's say something like this. The structure's still bullish. You're like, okay, Wyckoff's happening, and I'm afraid that I'm going to miss it, so let me just get in here, or let me just get in here. And the second you get in, something like this can happen. And the second that happens, you go in and you go, why did this lose? Why am I losing? This doesn't make any sense. Why am I losing? Well, the reality is because there was never any confirmation. You didn't wait for your actual system to be put in place to actually start giving you the trades you want to be, and you've now changed your entire system because you've seen a number of this happen, a number of this happen, or a number of this happen. This will happen. A part of trading is understanding that you're not going to be part of every single move unless you're me, okay? So you just need to work your way through all that and understand that over time, with this understanding about how to actually get involved, you'll start to actually see ways to actually then continue to get involved in certain areas, right? So like for instance, if this isn't to happen, and instead, let's say it doesn't tap into this lower zone, but it taps into this one and continues higher, that doesn't mean you've missed anything. It just means that we've now shifted to a new potential demand zone, and we can again look for potential entries here. Now again, same thing can happen. It might not shift into here, it might do this, and shift again. We have a new demand zone. Now, as it comes down into it, it might shift into it. We might have no confirmation, and it might drop into here. We might think we're bearish, but then we get an accumulation here. You're still good to go for buys if you have these biases laid out, because in a higher time frame, this is still going to be a good valid demand zone, which is still valid under overall mentfx blocks, which might not be valid with candlestick structure, but is valid with other structure. Because what does this market do? It is delivered to you in a multitude of ways. There isn't just candlestick structure. There is also mentfx block structure. There is also multi-level large order flow structure. And on top of that, you have multiple back and forths within all that by way of other time frames. So hopefully that made a little bit of sense to you guys concerning your actual entries and how to understand that, you know, when you have something like this happen, it's not that you're wrong, it's not that you're missing anything, it's just that it's just trying to trick you. Sly as shit. But the thing is, also, shit, I forgot. I lost my mindset. I lost my mind there for a second. Never mind. We're just gonna continue with this then. All right, let's get rid of all this because I want to be able to go over this with you guys in a second. When can we expect to see a series on Wyckoff? In 1 to 2 weeks. I'm done in 1 week, and then I'll go. Yeah, the crack wore off. Let me get some more coffee. What's that, guys? Hold on. You have to exercise patience. Yes, exactly. Okay, so okay, I got it. I'm back on my crack shit. Psychologically, we as even humans, like, let's get into some spiritual shit here, but as humans, we psychologically are very good at liking to experience the good and experiencing it in multitudes, but we're really, really bad at experiencing the bad. And as a lot of you know, even in death, in times like that, like, you can look at anything in life, whether it's eating, death, getting fired, just a bad day or anything like that. Your entire good week, let's say you went to Belize or something, you had an amazing week in the ocean and whatever, or the sea, whatever it is. I don't know what they got there. But you're having an amazing week, 5 days straight, and on the 6th day, the last day you're there, you know, you fight with your spouse, you get bitten by a shark, whatever it may be. You basically make it out that entire trip ultimately sucked, right? We're very good at making the bad overshadow all the good. And the reason that I say this, and the reason that I find it very important and bring it up here, is because when you're on a string of really, really good trades, and you've caught, like, you know, you've caught 1 to 1, 1 to 2, 1 to 10, 1 to 5, or something of that sort, and then you get hit by, you know, a -1, then a break even, then a -1, then a break even, a break even, a break even, a break even, and then a partial. You think that you're doing something wrong, and that or even your trade's missed by that tiny little pip over and over and over again. You forget that you just made some beautiful trades. Like, those go out of the window, and all you care about is the fact that you're missing trades, and you're worried about how you can get them back, right? And that's when the emotional side steps in. That's where the bad overshadows the good, and you forget why you're trading and how you're trading in the first place, right? So again, it was a weird anecdote, but the point of it is that this has happened to a lot of you, and it's happened to me, so I know it's happened to you, is that you will always overshadow all the good trades you make, all the great analysis you make, all the bad trades you stay out of, with the bad trades that you potentially break even on multiple times, the bad trades that you lose a few times in a row, or things of that nature, right? And that can easily overshadow you, easily cloud your judgment, and quickly you can, you know, blow an account. That's how it happens. It's happened to me in the past, so I know it's happened to you. If it didn't, then you're really lucky, and you don't want to go down that path, and you want to continue to work on yourself. But that's always something. Yeah. So break even is always better than 1%, -1%. Exactly, right? There are so many times where I've just broken even on trades that have ran an insane amount. I mean, I'm sure you saw the gold trade, for instance. Okay, well, that one actually ran 1 to 50 before breaking even. But if it didn't, it overall did run our, like, 1 to 600 or 1 to 500, whatever it was. It ran an insane amount. Yeah, that shit ran 1 to 300, right? Now, the reality is, a part of me says, oh, fuck, I missed my 1 to 300. Like, I should have just stayed in. I should have got in. I should have just kept it open, right? And that will overshadow your next trades without realizing that you just ran 1 to 50 on a fucking trade. You know, that, like, it's hard to sometimes look at all the good, especially if you're, you know, first of all, trading is a very, very individual thing, right? Unless you're like part of mentfx and you're in the group. But even then, if you're trading on your own and you're actually taking your own trades, it can be very, very easy to disconnect from the entire world and get into this like literally crackhead mode, like almost like a heroin type mode where you're like, I need the next hit, I need the next hit, let me get the next fucking trade. And all of a sudden, you're just losing trades. And you're losing more and more. And then you up your risk, you want a martingale, you're like, I got this back, I gotta get this back, I'm a good trader, blah, blah, whatever it might be. I've done this all the time. I've done this multiple times. Not anymore, really. But, spent 11 years in the industry, so I learned a lot about myself over time. And that's, again, why I manage the way I manage and I trade the way I trade. And again, for a lot of you, it's different. But I kind of wanted to go off a little rant on how, emotionally, how easy it is to disconnect from your own system, especially after, even think about this. If you started trading this Monday, or even today when market opens, and you see a beautiful trade and you enter it, and you hit, let's say, 1 to 2, you partial, if you do, let's say you partial, and then it runs 1 to 20, and you're sitting there going, oh shit, I missed 1 to 20, like I didn't get all that. Or like let's say you partial again at 1 to 10, and then it runs 1 to 50, but you don't make as much as you wanted to. Now you're sitting there going, shit, okay, well, I still made a lot, so I'm really happy. My account balance is up for the week, so I'm great. But overall, on this 1 to 10, 1 to 20, whatever it might have been, you made a total of, let's say, 3 to 4 RR. Now, at the same time, the next trade you take, let's say Monday, you lose one. You're like, that's fine. I'm up 3 RR for the week. You take another. You lose it. Oh, okay, I'm up 2 RR for a week. It's not bad. You lose another. You're at 1 RR plus for the week. You're like, okay, I'm still up, so I'm happy, because that's how our brains work. We're like, oh, we're still up a little bit. We're really happy. We're fine. Next trade you take. Well, because I don't want to lose it, and I'm a little bit scared, I'm going to break even early. Okay, your system's getting changed a little bit now. Okay, breaks even, then runs 1 to 30. You sit there going, oh, fuck, I knew it. Okay, I'm just going to get back in. Get back in. It's going into drawdown. Now I'm not going to break even. It goes up 1 to 5. Now I'm not going to partial yet, because I understand that I want to make back the shit I lost, and I'm sick of taking all these break evens. Loses. Oh shit, I'm at 0. I'm up 0 for the week. Okay, let me find the next trade. And now it sets in, right? And the emotions start hitting. And I mean, I don't know if any of you can relate to this, but this has happened to me multiple times. The emotions start hitting, and all of a sudden, you're just trying to funnel yourself into trades, trying to find anything. Maybe you're looking at the group trades. Maybe you're looking at the mentfx trade ideas, and you're just trying to find any option to make some of that money back, because you need to make it back, It's like, you're like, there's no way I can lose all this money. I was just up 4RR. What the hell happened in the last 1 day? So, I don't know. This was my little rant on psychology. Remember that you have amazing trades, and that you've had tons of amazing trades, and people in the group have had tons of amazing trades, and recognize that you are going to have feelings, and you're going to have shit trades that make you feel like you don't know shit. But the best way that you're going to be successful when that does happen, because it will happen to you, is by thinking and remembering that a part of trading is understanding that the sly motherfucker on the other end is going to make you feel that way sometimes. And then you'll be fine. So don't get emotional over your stuff. All right, let's see what everyone said, because I haven't really been reading. I've just been kind of ranting. Exactly, man. Yeah. I'm a stats and business analytics major, and my friend is a psychology major, and 9 10 times we argue about partials like crazy. It really is a tug of war between profit and safety. Yeah, exactly. So, I made my choice very late, of course, because, I took enough ass beatings, but I made the choice very late to say, okay, I'm always going to partial at structure, whatever it might be for me. And that partial at structure could be 1 to 2, could be 1 to 3, could be 1 to 4, could be 1 to 0.5, okay? And of course, a partial of 1 to 0.5, after losing, let's say, 1 or 2 trades, feels like nothing. But part of it is understanding that over enough time, the edge is always going to bring you back up. And as long as you constantly stick to your edge and never diverge from it, you'll be fine. But the important thing about understanding your edge in the first place is not trading until you know what you do works. And that comes with either back testing, either forward testing, journaling, learning, watching, so on and so forth, right? On repeat. There shouldn't be a time in the market where you're sitting there going, oh shit, okay, at mentfx, do you think I should exit here? What should I do? Because, it's fine to ask that if you're still in the learning phase, if you're still forward testing or something of that sort. But if you're in an actual trade and you're reaching out to me or someone in the group asking if you should be partialing or how you should be managing, then you haven't actually secured or understood what your edge is or how you're going to actually enter trades, right? Because, as I've said to many, as other people have said as well, 20% of this game is strategy. What you guys know here is 20% of the actual strategy. Section 3, when it's out, Section 4, when it's out, all of that is 20% of the actual things that you are learning. Okay, it's 20%. Now, again, we're going to go over psychology. We're going to go over risk management. This is part of that. Maybe I'll have this in the psychology section. But 80% of what you're actually doing is all up to the emotions, the psychology, and the risk management aspect of things. And if you don't understand those things, or if you're trading real money without understanding those things, you will lose in the long run. Just like, and I've spoken about this in the past, for instance, hedge funds, right? Like, look at Melvin after GameStop. The reality is people with a shit ton of money are no different from our shitty emotions. Their emotions are just as bad as ours, but because they have more money, they have more, they have a cushion for failure. Most of the time, their cushion, because they have so much money, will allow them to get out of that failure really quickly, and they're all good, right? That's the same thing of us losing some money, upping our lot size, making that money back and going, phew, whew. They can do that multi-thousand number of times. However, the one time it will fail is the time they'll go bankrupt, just like they did, almost, until they got bailed out by their friends. And guess what? We don't have friends that are millionaires or billionaires, and even if we did, they're not going to bail us out. If any of you, as some of you know in the welcome message, if any of you messaged me and said, oh, I blew my account, this shit doesn't work, I want my money back so I can trade more, you're already part of that. You're asking for the bailout. You're not learning at all. That's not how you're going to become a profitable trader. So again, you have to recognize that everybody undergoes the same thing, including banks, right? Some of the top banks that are not the composite men do the exact same thing. They lose a fuck ton of money, and they'll keep losing money, and they get back usually because of the cushion they have. Their risk management is also, on some level, absolute dog shit, just like ours. So recognize that it's a universal problem. It's not just a problem that occurs that is just connected to us, right? Let's keep working through some of this. Sorry, I just went off again. Psychology is like 90%, 10% psycho. Yeah, so I say 80-20, but exactly. Like, psychology is fucking insanely huge. Your GP, 1 hour time frame. Kindly take a look. It looks like a good opportunity. Thanks. So let's take a quick look for you. This looks like a support and resistance line to me, and I do not like to look at that. Never show me another support and resistance line. Okay, I'm kidding, but 1 hour time frame. It looks good for what? I have no idea what it looks good for. But maybe we tapped into this mentfx block up here, if there is one. Potentially we're distributing. We have some liquidity here. This was overall maybe an accumulation. We broke above here. We could be heading towards this demand zone. I mean, like, you got to show me the opportunity. I don't know exactly what we're talking about here. What he's saying is facts. Thank you. Yes, exactly. It hasn't happened to you. It will. Exactly. If it hasn't happened to you, it most likely will, unless you understand how stuff like this can happen and then prevent it, because you understand, the end goal for yourself, right? Like, there's some people, and I bet there are, but it's a very rare few that have gotten into trading, have learned to trade, never lost money in their life, and have already the psychological, emotional, fortress built for their trading. You have, I would guess 0.0001% of traders, right? Like, 1 in every 100,000, not even 100,000, much less, I think, have the emotional well-being for never losing a trade and just learning a strategy and then applying it, right? But if you're that type of person, then that's fantastic. Otherwise, if you're like most people, especially like me, I'm like fucking terrible with my emotions. Well, I was, and I've gotten a lot better. Then, you got to work on some stuff. And if I could do it, then a lot of you that are much more emotionally stable than me could do it as well. For sure, bro. Happened with me last week. Exactly. So this is why I'm kind of going over it, because I know that a lot of us have gone through it. I know we've all experienced it. So it's really important to, make note of it, understand that you're not in the wrong for it, but also you need to address it because it's going to be a huge part of your actual trading. Yeah, I think the accumulation looks good. Anton, kindly take a look. Thanks. Yeah, so I just took a look. Yeah, we're taking a look here. There's definitely an accumulation. It happened over a very long time. There's just a lot of wicks back and forth. But if you want to look at it, you have the selling climax, the AR, the ST, the SOS and B, potential ST and Bs liquidating some lows here. Then you have your spring. This is your sign of strength. We're getting the backup right now. So again, if I was to trade this, I'd be looking for buys already at the overall mentfx block or potentially at this demand zone here for confirmations inside here. But make sure you check the higher time frame, because I'm pretty sure the higher time frame off of maybe a 4 hour could be still bearish from here. So again, there's going to be a fine opportunity here, most likely with mitigation that could come into these supply zones up here. So, partial zones, stuff like that. But definitely it's fine. Like, if you want to trade this, I myself don't like it too much. It's just, it's okay. Just look for the confirmations. And also, is there a point for this support resistance, or is this just a way to see liquidity? Bro, you step-by-step described my first FTMO challenge. Yeah, same here, guys, same here. That's what happened with my first FTMO challenge as well. Honestly, I'm not even kidding. Especially when, you open an account with 100K in it, like, shit, that's more money than you've ever seen in your life. And at that point, it's like, you either think of it as a demo, or you can't lose any of it, right? Because you lose $1,000, and even though it's 1%, you look at that and you say, fuck, how am I ever going to get that back, right? And then it goes to shit. Yeah, man, I had to mute y'all profit makers in the group when I'm losing. Exactly, yeah. It's very easy to be caught up in this. And again, like, it's not even about being part of a group where people are sending amazing trades and catching stuff left and right. The thing is, this will happen with anything. Whether, if you're on Instagram and you see people making any trades, any money, even if they're just not even making trades and they just have a Lambo and they're like, yeah, learn to trade like the best. You're like, fuck, I gotta get the trade. And then all of a sudden you're losing money, right? Or if you're watching a YouTube video and you see someone looking at demand and supply zones and trading them perfectly, you're like, I can do this. This is so easy. And then you start funneling into that. Even without them actually trading, you start funneling into things that you see. You start looking at your own charts. You see anything that looks like anything you've seen in the past. And you're like, oh my God, this will work. I can't miss this. I need to get in. Same thing happens, right? So whether you're in a group or not in a group, you're going to have this happen one way or another. If anything, being in a group is even better because you literally have to have the composure to watch, we have like 500 people in here, to watch 500 people potentially post trades that they're taking, amazing trades let alone, and watch them go by, as opportunities that you missed. But in reality, you just need to recognize that they're not opportunities you missed, they're future opportunities that you're going to catch. That's it, right? So just make that mini distinction in your own mind because that can change everything for you. Loss will happen. Don't take it personal. Exactly. You're not a bad trader. If losses happen, you're getting slide by the composite man. You're being tested. Let it be a test. Don't let it be account blown. Just be fake mad. Losses equals lessons. Not always. Not always. Losses are only lessons if you end up taking those losses and transferring them into revenge trading and then losing your account. Then they're a lesson. And they say, next time you have a loss, don't fucking revenge trade it. That's the lesson you learn from that type of loss. But if you have a strategy and a system in place that works and you have a loss, it's not a lesson. It's just a little slap on the wrist that says, yo, it doesn't hurt. It's a slap on the wrist. Just wait till the next one, right? I literally, if you told me for the rest of my life, if I had to get slapped on the wrist, every day for whatever, like 10K a day, I'd be like, all right, sounds good. It's the same thing here. If you're willing to take the slaps on the wrist for, months after months after months for your entire life, and you know that it's not going to hurt you, then you can become infinitely profitable. If that, right? Like, you guys have to understand that this is probably the most rewarding job in the entire world if you get it down. Otherwise, it can be the easiest way to lose all your money. And that's why, you have people that get really upset when they do. When we upload the 2-hour trading on Bitcoin, I think it's actually uploaded. So after this, I'll have that available to all of you. And again, just so you understand, we're going to talk about, let's talk about this right now. Oh, here's my nice little FTMO account. 50K. We finally got our account. I'm so excited. We're about to destroy this market. But let's go over here to Bitcoin. I'm just going to show you guys exactly what happened. So as you can see, with all of this in here, and this was not part of the video, so I'm going to delete that. But that was something that I was looking at even after because I went to sleep, so I wanted to stop recording. Where was this? On the 1 minute, whatever it might have been. Okay, cool. So inside of this, it might not look like it, but when you guys rewatch the recording, if you do watch it, you can see that all these trades didn't really run, right? Like these are very, very tiny trades. Now, similarly, these trades could have ran 1 to 30, 1 to 50, 1 to 60, and it wouldn't have changed the way I would have approached them. Now, what's interesting as well, you'll see it all too. These weren't 3 trades that were all profitable. There was a loss right here, and there was another loss in here, I believe. So you're going to see those 2 losses as well. And despite those 2 losses, overall, on the end of this trading right here, just 1, 2, 3, the overall RR gain was about 3.5 or 4R, right? And if you really want to look at that over the time that it happened, I think it was 2 hours. Yep, 2 hours. 2 hours to make 4%. Or, based on what your risk is, that's 4% in 2 hours. With 2 losses and 3 wins, and the 3 wins that didn't even run, right? So this is the type of thing that will maybe even help some of you make the distinction between understanding that you don't need to be catching these fucking insane trades, and that you will catch insane trades, but part of catching them is taking losses, taking smaller trades, taking smaller partials, and getting broken even. That's part of it. Like even this trade right here, I wanted it to run to, I believe, these equal lows. The whole thing started with me talking about how these equal lows, I wanted to see them cleared because I was seeing, for instance, selling climax, AR, or even selling climax, AR, ST, SOSB, STB making equal lows, and I was expecting a spring the whole time. But despite that, we still bought here, right? And that's all part of confirming and working within ranges and all that stuff. And you'll see how we did all that in the video. Okay, so that'll definitely help some of you. And again, like there's literally no 1 to 20 in here. There's no 130. The highest trade was a 1 to 3.2. That's the highest trade you're going to see. And I mean, you guys have seen me post stuff beforehand when it was like 1 to 50s and stuff like that, so you know it's possible. But the point is, you know, this is crucial in your understanding. And again, I did this over the entire recording. You'll see me enter these prior. Well, not enter, but like throw them on. I honestly couldn't figure out the paper trading. It was so bad. So you guys will see that. But you'll see me manage these live and all that stuff. So a lot of you will be able to get in mind how I look at Wyckoff, how I look for the confirmations, how I get involved on it prior, how I get involved on it lower, how I mitigate risk, move break evens, stuff like that, partial, and how overall, even with 2 losses, this came out to about a +4 or +3.5 RR session, right? That's the point of trading, is understanding how you can do that even when you're not getting 1 to 30. And guess what? If any of these did run 1 to 30, that would have been maybe a 10 RR session, right? But overall, it's a profitable session. And this is a 2-hour session. And that's crucial in your own trading. Understanding that, you know, whether it goes to the moon or whether it goes just a tiny little bit, you're going to be making money if you're properly applying your own system and if you've tested it. I seem to keep making the mistakes of being in a trade, being plus a decent RR, but instead of taking it, I always try to let it run in the hope that it will get the big one. That's exactly what I just spoke about right here, right? So if you got into any of these with the hope that it was going to run to these highs, or got into the sell with the hope that it would run to finally equal lows, you would have lost 1, 2, 3, 4, 5% in this session. On the other hand, if you properly mitigated or even broken even, you would have lost 2% total. Or if you partialed like I do, you would have made plus 3.5, right? So there's multiple aspects to it, definitely. And even if you weren't someone that is aggressive as me, isn't as aggressive as me, and you did end up breaking even on some of these trades and took those -2 losses, that's not a bad trading session. What that means is you properly applied your concept, you properly applied your system, and the next time that you do get the trade that you need to get, and let's say your normal RR that you only partial at is 1 to 10, then that next time you partial, you still have 3 more trades that you can use as a buffer technically to lose, and you'll still be profitable after that if you partial at a 1 to 10, and then potentially it runs even higher because you'll lock in 5, thereby it's break even, and then if it runs further, then you've made money, right? You have to realize that, you know, win rate's not everything. Even though I might have a higher win rate because of the way I partial, doesn't mean shit if I was still risking more than I make, right? Just like if any of you have a 30% win rate, but you're making about 10 RR every time you do win, that is a trading system that is pristine. That's an amazing trading system, even though it doesn't seem like it at the time. Real money always for me. That psychology hit different. Yeah. That welcome message is my favorite info in the Discord. Thank you. You're looking for buys. Yeah. So I went over that a little bit before. Can you finish the case study? Oh my god, yes, of course, my bad. Holy shit, we were looking at this, weren't we? Jesus Christ, I'm really bad at this, eh? Alright, so we have this wick. As you all remember, let's just go from the start. Daily comes into the zone, he's already seeing it mitigate. He goes lower, he sees the 4-hour mentfx blocks formed, or he sees the 4-hour candlestick structure put in new highs, and looks at a potential area that can be a demand zone. Gets lower, refines that 30-minute demand zone because he realizes this one is mitigated, this one is unmitigated, refines it to 50%, or the overall one, whichever you want to do. Gets to the 5-minute, refines it to that zone right there, easy to see, unmitigated, last down move before an up move that began to break structure, left behind that demand zone, looking at either the 50 or the open, whatever it might be. He has that refined to his lower time frame 5-minute zone. He gets lower, 5-second zone. And this is going to be posted for all of you, don't worry. And he let me, so thank you so much, man, again. So again, under goes accumulation. Selling climax into the automatic rally, into the secondary test, trading equal lows. Again, he's not trading this because it hasn't given him setups yet. STB, he gets the sign of strength, potential sign of strength, move down into the spring. Now again, if you're looking at the spring, just look at this zone right here. You can see there's Wyckoff in there as well. So if you wanted to, you could wait for the extra confirmation of the selling climax, the AR, the ST, STB, move up, mentfx block formed. You get the entry right here if you wanted to. He didn't do that. He got the overall. He saw the break of structure higher, left behind the mentfx block, entered the original break to make sure he didn't miss the trade because we are in a lower time frame and there's a chance you can miss it, probably with less percentage. Took on the open of the MB, and as price made a retrace, took it on the LPS, stops place right below the test. So expecting this last demand zone, which you can see if you I mean, we can zoom in a little bit here. If you see there's last down move before this up move, leaving behind imbalance, so it's an unmitigated last down move before the up move, entering on that, or at least 50% of it looks like, and took that to the promised land, higher. Okay, again, even though it ran what looks to be like, I think it's like 1 to 50, 1 to 40, 1 to 30 maybe, I'm not 100% sure, whatever this might have ran, partials were still taken at this high. Now, when these partials were taken, you can see that this original trade, or if you took the partials of this original trade here, this RR right here, the lock-in of it, is still less than 1 RR, right? But because he was able to wait and get an even better entry, that same partial is also now giving him 1 to 7, 1 to 8. I don't know. I don't know how that looks. I think maybe a 1 to 8 RR. So he's locked in 4 RR on this trade and 0.5 on this one, locking in overall, 4.5 RR already. That's 4% locked in within, few minutes, right? Locked in within a few minutes, and then the trade runs. Now, the trade could have not ran, and he would have made money. Or in this case, it could run, and he made a shit ton of money. Both, like, either side of the coin could have happened there, right? And additionally, if you were someone that wanted to wait for the actual break of the AR, the SOS, to confirm the overall Wyckoff, watch what happens. Waiting for confirmation. Still not confirmed with this high. As you can see, it didn't get above here. Maybe it did, I'm not sure. Boom. The break happens, gets above the AR. At this point, you're valid to either trade the overall mentfx block, which is from the AR to the spring, and have stops below here. You're also valid to trade the last mentfx block, which is this mitigation right here. If you put a box around here, that's valid. You can see the entry at the open, so you had a little bit of drawdown before it took off, right? There's multiple ways to funnel yourself into this. And if you did not get this... So first of all, I would have probably gotten the entry of the test in here. He didn't do that. He wanted to wait for this one. For this break, that's fine. He waited for the break, he got involved here. He waited for the lower price action, got involved here. If you didn't want to even do that, you had another option here, right? If you didn't want to do that, price broke above, never really retested, so you probably wouldn't have gotten in right there, and then it kind of just took off, and then it just marked up.